the Ponzi system that exists is such that organisations are just borrowing large amounts of money from each other and then using that to make money by lending it to others who are using that to lend it to others, which means that you have a system where ultimately no one's really got the money that backs up all the money that's being lent out. And subsequently, when that system comes crashing down, then it's good night.
A tax on speculative financial transactions could slow this merry-go-round. However, this financial transactions tax would need to be introduced globally. But even the small-scale version with just 10 EU states failed after years of negotiations, even though German Finance Minister Wolfgang Schäuble personally pushed for this tax. But Britain was against it, and will be even more against it in the future. London as a financial centre would suffer. That's most regrettable, because this tax would be the necessary surgery for the sick financial system. The ECB and other central banks flooding the world with cheap money isn't a cure. It's just pain relief, and in the long run, it has serious side effects. The entire setup is a system that keeps saving itself temporarily, but at some point it will inevitably fall apart. Until then, it exacerbates the enormous injustice that already exists. Those who have benefit. A handful of super-rich individuals own as much as the poorer half of the world's population combined. This flood of money is increasing the gap between rich and poor even further. People like these are struggling at the hands of low interest rates. Karl-Heinz Eich and his friends are worried. In the past, the world was a veritable paradise for savers. The economy was booming and interest rates were high, even if inflation was too. Nevertheless, successive generations lived by the motto, those who save get more out of life.
In the past, you could rely on a certain interest rate for your savings account. You could live with that. But not anymore.
In the 70s, we got a fixed rate of 7%. For a short while, we got 11%.
Karl-Heinz Eich has an appointment with his financial advisor at the bank. What should he do with his money?
We have this account, and next year a life insurance policy will mature. What can we do with this money?
The advisor wants to know about her client's readiness to take risks. He's actually more risk-averse and wants to invest his insurance money as broadly as possible. Every day it sits in the savings account, it loses purchasing power, and he knows that.
Since you're getting almost no interest, we have to see where we can generate a return.
And that means stocks and shares. Investing more in property bonds and shares? That's what his bank advises. What else can he do in times like these?
I don't feel uneasy or really comfortable with the idea, although I've generally had positive experiences to date.
Shares, property bonds, higher risk? Whether he likes it or not, Karl-Heinz Eich has to participate in the game of the big financial world. It's an industry in party mood. Big companies are buying up competitors thanks to low interest rates, thereby increasing their share value. Only shareholders benefit from this strategy, and they tend to be affluent. German chemical giant Bayer bought American seed supplier Monsanto, for example, for 65 billion euros. The world's largest brewery, Anheuser-Busch InBev, swallowed the number 2, SAB Miller for the equivalent of over 100 billion euros. And software giant Microsoft bought professional networking site LinkedIn for 26 billion. Companies as the playthings of international financial interests. A less prominent case, WMF has been based in Geislingen in southwest Germany since the mid-19th century. It's a brand with a world-class reputation. WMF manufactures cutlery and coffee makers. It used to be in the hands of German owners and shareholders. Its operations meant security for thousands of families. Then the financial gamblers set their sights on WMF. The company has changed owners 3 times in the past 11 years. Every time it's sold, the price goes up enormously. At the same time, wages and working conditions have worsened. There were massive protests. When the company was taken over by French group SEB, Martin Purschke hoped things would finally get better again. He's on his way to a WMF works meeting on behalf of the IG Metall Labour Union. He thinks it's symptomatic of today's age how easily a deal worth billions is made. The investors at the big banks can get their hands on cheap money, no problem. The new owner paid 1.6 billion euros.
It's so easy for investors to buy and sell businesses and achieve huge profits. You'd never achieve that through a company's day-to-day operations. The question for me is, to what extent is it harmful when jobs become a pawn in this game?
Inwieweit es schadet, zu was zum Spielball auch die Arbeitsplätze werden.
A works meeting during unsettling times at WMF. What are the prospects with the new owner? The staff have had bad experiences in the past.
We've been milked like a cow, bled dry. When there's nothing left to get out, we're sold off.
It's been that way for years. Everyone lines their pockets.
We can only hope the company survives and that calm is restored.
At least the employees are told today that the new buyers do not intend to cannibalize WMF further before selling it on. But union representative Martin Purschke knows the only way such deals can be paid for is through extremely low interest rates on loans. The deal at WMF went as follows. New York-based equity firm KKR bought WMF for around 660 million euros via a subsidiary located in a tax haven. KKR used 100 million of their own capital and borrowed 560 million from banks. 4 years later, KKR sold WMF to French household equipment maker SEB for 1.6 billion, a deal supported by very low interest rates. KKR made a profit of 940 million euros after repaying the loan and investing just 100 million of its own capital. That's a return of more than 800%. A lucrative deal, but only for KKR shareholders.
That's possible because at the moment there's enough money on the global market. Other investors are able to pay such prices. If the money weren't there, they wouldn't be able to shift such volumes.
Loans for almost nothing. That's the flip side of the money deluge. Financial investors do deals with huge sums that would have been unthinkable in the past in a regulated financial system. Today, many wish for a return to those times. The deregulation of the financial world has a long history. Until 1971, the world was financially stable. Currencies were covered by gold. The real economy was in balance with the amount of money available. Then, US President Nixon needed money for the Vietnam War.